Good morning and welcome to the Cohen Group Northwest studio. Today is Wednesday and that means it's time for this week's market update, but it's a special market update because I also have the data wizard and listing agent extraordinaire Leo Cohen in the studio with me this morning to bring a dispatches from the front flavor to our topic today. Now, dispatches from the front is all about our experienced brokers talking about what you're seeing day to day in the market. You see, right now our team has 3 residential listings and we've got 15 homes under contract. Some of those were even contingent sales. So I think it's pretty fair to say that we've got a pretty good perspective on some of the things that are happening day to day in the real estate industry in Whatcom County. Now, as you know, I'm the data nerd, which I learned a lot of from you. So we'll be bringing dispatches and market updates together for a joint episode.
Diving into my perspective on this market, my whole world is data, and a lot of Tiffany is being humble, but a lot of what I get is data that is synthesized by her, the things that I look at to make educated decisions. I tend to lean away from sensationalist, any sort of media, especially real estate media, because it's not smart to make quick pivots and quick decisions. Just to give a little context before we dive into the data, March 2020, COVID hits, everything changes, right? But it doesn't change forever. It changes for a specific period of time. There's this response period of it hits, respond, right? Reaction, essentially. Now, pre-March 2020, homes were on the market for 15, 20, 30 days.
Yeah.
If they're in rural areas, even if they're really nice county properties, they're on the market for 40 to 60 days.
Yep.
That was normal. And it was normal for people to have inspections or be able to sell contingently or get one offer or get no offers and have no review date. These things are normal things that happen. So for people that are entering the market during COVID, March 2020 till now-ish, wherever we are now, this is not reality. This is an economic reaction to a global pandemic, right? So March 2020 hits, the listing inventory stops. People start not listing homes, which affects the absorption rate. It affects the amount of inventory coming on the market. And at that time, not all of the people that are moving here were moving here. So all of a sudden everyone goes, okay, there's no homes on the market. That's step one. Step two is people go, I can work from anywhere. Sweet. And I make a lot of money. I live in Seattle or San Francisco, and I can live in Bellingham. And at that time was really affordable, not so affordable now.
Right.
And then interest rates, money was really cheap at that time too. So these 3 factors make people move here. The market just goes nuts. So we start seeing multiple offers. We start seeing waived inspections. There's literally a form now for waived inspections. The 22 AD, the appraisal waiver, the additional down addenda, all these things start becoming a thing. These are not normal things. Now, fast forward to now. The dispatches from the front is the feel part. It's like you've got the data part, you've got the technical part, and then you've got the feel part. What am I feeling? We really don't see the data until a month later, right?
Yeah.
So what Tiffany's, there's a lag to it. So what I'm feeling over the last 2 to 4 weeks has been it's not a bubble bursting. It's literally just we're on the freeway. We're driving along. If it's me, we're going 80. If it's Tiffany, we're going 65, just barely over the speed limit.
Yep.
What happens is the conditions start to change and we don't jam on the brakes and get off the exit and go in reverse.
Yeah.
What are we doing?
We're slowing down a little bit. We might see a couple brake lights up front. We might see some oncoming traffic, a whole heck of a lot of new listings coming on the market to expand the metaphor. And, there's more inventory maybe. People are taking a little bit more time. And you might slow down just a little bit. Me going from 65 down to 60. If I see a trooper on the side of the road, you might slow it all the way down to 70 or something. But it feels like a change.
Right.
But but you're still going forward.
Right.
Real fast.
And I think there's a lot of what happens in an economy that is in your head. Like it starts to build momentum because people start thinking that things are a certain way without looking at data or listening to sensationalist media. So the problem with that is we're not making decisions that are level and based on fact. A recession, oh no, I said it.
Oh boy.
Is stigmatized. It's a normal cycle in a market. And what it means is in an insulated market like Whatcom County or Bellingham is that we start to plateau a little bit.
Yeah.
And that's normal and that's good and that's okay. that doesn't mean that you're going to lose all of the value that you made in equity in your home. All of that being said, it's normal to have an inspection. It will become, there's this transitionary period that we're going to go through together, all of us, whether you're getting ready to list your house or getting ready to buy a house. Interest rates aren't going to be this high forever.
Right.
It's to hedge inflation. It is a strategy. Interest rates at some point will come right back down with the cycle of the market.
They might not go down though to the 2.8s, the 3s, right? Again, that was also a response, the extremely low.
It was a very extreme response, and it was a necessary response. And so Tiffany's exactly right that interest rates being low is relative, right? And we really need to look at day to day and month to month, but we also need to look at this historically. We can't say that the market's going to be the same as it was before, but we can still look at trends and go, this is okay. The market's not going to crash. This bubble. Anytime I hear bubble, I just want to.
Steam starts coming out of our ears.
We are going to have a normalization of our market. So I think when you're getting ready to list your home, look at data, and also understand that when you price it, you need to be okay with one offer.
Yeah.
And
all it takes is one.
All it takes is one. That's Tiffany's favorite famous saying to me. Not having a review date, I think, is going to become more and more common. You're on the market for 20 or 30 days. Your expectations going into this, transitioning into this new market as a real estate broker and as a potential seller and buyer need to be around these normalization points. So with all of that being said, it's going to hit slow, but it's transitioning. And so don't be afraid. It's going to work. Everything's going to be fine, but set proper expectations. With all of that being said, let's talk about the data.
Absolutely. So one of the biggest questions that I get, and I'm sure, Leo, you've never heard this question before, is with a market softening or slowing down, does that mean prices drop? Does that mean everything becomes easier for buyers? We might be able to see pre-COVID prices again in Whatcom County. There's no one quick short answer to that, but one thing that I do want to show is the difference between a hot market, which is what we've been experiencing for the last couple of years, and prices dropping, and the fact that those two things do not necessarily go together. This is one of my absolute favorite charts to show anybody who's trying to understand the difference here. So this shows the median closed prices every month for Bellingham single-family residential since the beginning of January of 2020. That blue line is the median original list price as houses go on the market. Our red line here is the median closed price. In hot markets, we see a distinct gap between these two markers, the list price to the sale price. We saw that in the middle of 2021. We saw those lines tighten up together towards the end of the year. And then at the beginning of 2022, you can see those two lines diverge really significantly. And that has been the craze, if you will, of the last 3 or 4 months. Now, as Leo mentioned before, this data is lagging. So I'm really curious to see what this is going to look like for June and July of this year as inventory numbers continue to rise. Now, here's the thing though. As a general rule, these net lines are both trending upwards over the course of the last couple of years. So even if the lines continue to tighten together, we're not seeing any sort of drop back down to those early 2020 prices. To look a little closer at median closed prices, here's the last 7 months of median closed prices, again for Bellingham. And May's is just for the data that we have up until yesterday. So you can see a significant increase from the end of 2021 and that 630 mark in November to 747 for median closed residential over the course of the last 6 months. And I've covered in a previous episode the types of changes that even the Great Recession brought to our median home prices and put together a whole list of proofs for why I don't believe we will see that significant of a drop, if any, with a more minor recession or even a market softening sans recession.
It's incredibly important going into a more normalized market where the prices are still appreciating to look at the data, not make generalizations, not assume that's because your neighbor's house sold for this, that you're guaranteed to sell for that. It's important to not make assumptions and generalize, right? It's important to look at the micro data of your neighborhood, slightly larger micro data of your area or general region and of the entire country, but in that order, right?
Yeah.
So all of that data is important. Look at the data and use sources like a local professional that knows what they're doing, that's been through multiple markets.
I think along with data legs, we see narrative legs. I think social media captions have a tendency to fall along the lines of pended in 5 days, multiple offers, so crazy, closed, 100,000 over list price, or they do the doom and gloom of bubbles bursting, markets shifting, change is coming. We all are scared of change.
Do something now.
Right.
Fear is on the horizon. Yeah.
And one thing that Layla is really great about grounding all of us in is she's always reminding us real estate decisions should not be made based entirely on the market. Obviously, this is a market show and we're analyzing the market, but any real estate decisions that you are making for your life have to meet your needs, your goals, and your financial family life profile. There's no way to jury rig the market to fit your specific situation. So you have to fit your situation into the market.
Yeah.
But the decisions that you make have to be based on what you need and what you desire, not the optimal time to make a real estate move.
And that can be a reason to sell.
Yeah, absolutely.
But it doesn't have to be a reason to sell. And ultimately, but I tell people more often than not, do you actually want to move? Do you actually want to move? Do you need to move? If you don't need to move and you're making this because you might make money on your current house, but it completely puts your life in a different place that's not necessarily bettering it, but you have money in your pocket, do you need to move?
Yeah.
And we're not going to push you to do that. We're going to show you this data, show you what's happening, and help you educate that once you've made the decision, whether it's an economical or a more emotional or familial decision to move. We're not going to push you to move. We're just going to show you how to move, right? I think as we've all found here in the last couple of years, there's a lot of sensationalist media out there. And I think with something that is so heavily rooted in data, it's so important to not make moves based on sensationalist news or any of these other avenues of information. Keep your cool about you. Make a good level decision. Hire a professional. Get the information. And ultimately, make the decision that's right for you.
And that, friends, was this week's market update and dispatches from the front. So we will see you next time.